let's continue. So for this to be 100%, this should be 80% plus 20% to get that. But you're told that this has this amount. So how do you get that? So if you say 56980 divide by 80%, it should give you the sales figure. So 56980 divided by 80%, it's giving us 71225. What are we determining here? We want to say to get gross profit. So gross profit is the difference between your sales less cost of sales. And you're given sales we got the sales figure there. We have the cost figure there. So how much is your GP? 56980. Your GP, the difference between that should be 14245. Do we have that? Yes. So for question 3, solution is number 5. And we can proceed there. Question 4. Question 4. What does it say? You are given, calculate the total comprehensive income for the year, no drawings, and additional capital. So this is basically a typical example of incomplete records. Okay, you know that your formula says basic accounting equation equals to equity plus liabilities, right? How much are your assets there? You have your land and buildings for 52165. You have your inventory 3173. You have your trade receivables as 31267. Those are your assets equals to, you're looking for equity, but you have a tentative opening balance of 272506 plus your liabilities. How much are your liabilities? Payables, you have 27625. Income in advance 1500. Accrued expenses 15605. Okay, so this should balance. This, when there's an equal sign, means it should be the same. Alright, if you 85265 plus 3137 plus 31267, you get 86569. And then if you add the liabilities to 7625 plus 1500 plus 15605, you get 44730. So you're adding all this to get that, and all this to get that, right? So these are the two figures that you have, but they're not equal. All right. If you say this minus that, like if you say your assets minus liabilities should give you your equity. So if you were to subtract the 26569, so your equity is equivalent to 41839. But my equity will have an opening balance, so it reduced from this figure to that figure. So how can equity reduce? It's reduced by two main things: drawings or losses, isn't it? So in this case, we are told in the question that there are no drawings. So the reason why it decreased is because of one thing, which is a loss, Therefore, how much? of how much is 3667, but maybe my additions were wrong, say. Because there is no answer like that. Let's start again. 27625 plus 1500 plus 15605. So this one is correct. 5265 317 3 plus 31267. So this one is wrong. It's supposed to be 86605. Alright, 86605, not this one. Forgive my additions there. Trying to do it quickly. So minus that 41839. It gives me how much? 86605 minus 41839 gives me a different number. Sorry, rather it's 86605 minus 44730 rather. And then minus 72506. We've got 30631, a loss. So is this minus that? Right? You get that, but not that rather. It's 6605 minus 44730. You get here it's 41875. So if you say that minus 41, you get a loss of that. Do we have a solution? Yes, solution number 1. Sorry, it's a bit messy. So you're adding all this 1, 2, 3 and subtract an addition of 1, 2, 3 also. So it's this minus that, you get that, and then opening balance minus the new balance, there's a loss of that, isn't it? So that's question number 4. We go to question number 5. What does it say? So okay, we do this quickly. You can see it's easy. Piece of cake. Credit losses, statement of P&L, other comprehensive income will be that. So I quickly just look. Do we have any credit losses there? No. We don't have a bad debt or anything. So do we have an allowance? Yes, we do have an allowance of 1.2. Is it increasing? That's the only way we have credit losses. Then we see you're given GS allowance is 4% of outstanding debtors. So how much are outstanding debtors? Or trade and other receivables. Trade and other receivable control. We have 2,300. But we are told there that there is a credit note for a debtor who returned. So there's a debtor who returned. It reduces our credit losses. So 2,300 minus 2,300, we get 19,000. Multiply by 4%, we get 760. So this is our new allowance for credit losses. All right. So it means our credit losses are reducing from 1.2 to to 760. So a decrease in credit loss is income. It falls under other income, right? So we do have a decrease. So it means we don't have credit loss. So we have a solution of 1, which gives us 0. Question 7. Question 7. The amount recognized is insurance. The amount that should be recognized as insurance. Do we have insurance there? We do. So we have insurance in our statement. Insurance in our statement form. Insurance in our statement for 200. All right. So do we have anything to do with insurance? There is an insurance policy that was for the coverage of 288 for the coverage until December 2018. When is our year end? Our year end given is 31 March 2018. So this is going beyond our year end, right? And according to the accrual concept, we are only matching up to our year end. So anything that falls out of our year end is either prepaid or is accrued when it's not paid during the year end. An expense not paid during the course of the year. So we have how much? 288. So in this amount, 2880 is included. But not all of it should be included because some of it falls beyond our year end, isn't it? So if this one was taken in January, how many months falls into our year end? It's only January 2018, February 2018, and March, which is our year end 2018. So from this, we only need to have 3 months, isn't it? That should be in there, not the whole amount. Are we together? So if you were to calculate, if only 3 months should be in there, of the 12 months that should be deducted there, it's how much? It's 9 months, isn't it? Because we are saying our year is 12 months, and we only need 3 months equivalent to be in there of this. So how much should we deduct? We should deduct 9 months worth of insurance, isn't it? Because it's for the following year. So we say 2880 divided by 12 to see how much is it per month equals to 240 multiplied by 9 months, we get 2160. So 4200 minus the 9 months worth of insurance should give us the insurance that we should account for, which is 2040. Do we have that? 2040, yeah, which is solution 5. Let me proceed. I think you saw it, right? Yeah, I think so. With solution 5, proceed to question number 8. Trade and other payables in the statement. How do we have trade and other payables there? Trade and other payables. And other payables, we have how much? We have 12,100. Right, we have 12,100. And then do we have anything to do with trade and other payables? Fixed deposit. A tenant moved out of the office. Prepaid rent. Credit note. Stationery at hand. Do we have anything else relating to? We have C. Employee salaries were outstanding. So we need to add salaries. They were not paid. They are supposed to be paid, but they are not paid. So we need to add the salaries figure there. 100 plus 500 to get 16,600. Do we have any 16,600 there? Okay, so number 8. Yes, which is solution number 4. We go to question number 9. Given information there, we want to see additions. How much are your additions? Alright, you are told that new machinery was bought 7 to 600. So that's your addition, 7 to 600. Do we have anything like that, 7 to 600, which is solution 2. And then question number 10. The amount to be disclosed is disposal. Okay, in that. How much should be disposal? I prefer to do our T account and call that realization or disposal. It's one and the same word, right? How much are we disposing? We're disposing machinery with how much? 300, isn't it? That's the machinery that we're disposing. We're disposing it for how much? For a trade-in value of 13 that much, isn't it? And then how much is our accumulated depreciation? Accumulated depreciation of this machinery. How long has it been in our business since the day it was bought? So we can quickly calculate it there. It's 23,000 multiplied by 23,000 multiplied by 15%, which is our depreciation rate, multiplied by how many months? We can say May to May is 12 months. That's May 2017. May 2018 is another 12 months. June, July, August, plus 3 months, isn't it? 1 May to 1 May 2006 to 1 May 2007 is 1 year. 1 May 2006 to 1 May 2007 is 1 year. 1 May 2007 to 1 May 2008, it's 12 months again. Then from May to August, it's May, June, July, August, 4 months, isn't it? So if you say 12 plus 12 is 24 months, plus 4 is 28 months of how many months? Of 36 months. Okay, that's the easier way of doing that. The reason why we are saying 36 is because it's covering how many years? 3 years, right? 3 years, yes, 3 years. So 12 by 3 is 36. So I can just say 28 divided by 36. Then 3, 1, 2, 3, multiply by 28, divide by 36, equals to that, multiply by 15%. Is it going to come out? No, I don't think it will be accurate. Yeah, it won't be accurate. Okay. Now let's do it the longer way. It's not going to come out. Let's do it the longer way. The longer way is tedious. Trying to avoid it. But it's the more accurate one. If our year end is February 2009, the beginning of the year is the 1st of March, the previous year. Alright? So, the previous, 1 May falls into the year from 1 March 2006 to 28 February 2007. How many months is it? So say May, June, July, August, September, October, November, December, January, February, March, isn't it? Or say May, June, July, August, September, October, November, December, January, February. February is the year end, so 1, 2, 3, 4, 7, 8, 9, 10 months. So we're saying 10 over 12 multiplied by 23, 123,000 multiplied by 15%. Okay, so that's 1. And then from 1 March 2007 to February 2008 or 18 is 12 months. So 12 over 12 multiplied by 23 multiplied by 15%, isn't it? So from 1 March to what's the date here? To 31 August. How many months is it? So say March, April, May, June, July, August, which is 6 months. So we say 12. 6 over 12 by 23, 1, 2, 3, by 15%. Then that's your accumulated depreciation there. So 23, 1, 2, 3 multiplied by 15% equals to multiplied by 10 over 12. So the first one is 2875, and the second one is how much? Second one is 3450, and then the third one is 1725. So if you add that plus that plus that, plus 3450 plus 2875 2875, you get 8050 is your accumulated depreciation. That should come here, 8050. So your carrying amount is the difference between cost less accumulated depreciation. So you have your cost there, less accumulated depreciation. So your carrying amount is equivalent to the amount that should be disclosed, which is 14950. Do we have 14950 there? Under your disposal, which is question number 10. Yes, we do, which is solution 1. Solution 1, we got question number 11. Question number 11. Assume depreciation is that for the machinery that was disposed. So we have depreciation of 3 items. We're given 1, the disposed machinery. Depreciation we're given is 9,000. What about the one that is remaining? 2, we said we had machinery for 72,600. And this machinery we sold 23. So how much is the remaining? The remaining 72,600 minus 2343. The remaining is equivalent to 46,600. Let's depreciate this. So first is 1012 multiply.
How are you?